If you follow the news, you probably feel like you're getting a whiplash. One headline says interest rates are stuck, the next says trade wars are heating up, and then another one says that home sales are dropping. It's a lot to process, but if you live in Oakville or you're trying to move here, you need to know how these stories connect. Not the scary headlines, but the real story underneath. I've gone through some of the major reports from last week. We're talking about the Bank of Canada, the Canadian Real Estate Association, StatsCan, Urbanation. I've connected them all into one clear picture. In the next few minutes, I'm going to show you where the Oakville market actually stands right now. No drama, just the facts. And I think you'll be surprised by how much opportunity there is actually sitting here. Okay, let's start with the Bank of Canada. On January 28th, they announced they're holding the overnight rate at 2.25%. That means the prime stays at 4.45%. The reason they're holding? Well, the economy had a strong summer, but things slowed down in the last few months of the year. Growth is expected to be modest, at least for a little while. But here's the important part: inflation is sitting right around the 2% target. That's exactly where the bank wants it. So, what does this mean for you? I mean, it means stability, right? If you have a variable rate mortgage, the pressure has kind of eased. If you're waiting to buy, you now have a clear window where rates aren't really changing dramatically. So the bank isn't rushing to cut the rates, but they're also not raising them. We're sort of in a holding pattern. And in real estate, a holding pattern is actually a good thing. It gives everyone time to breathe and make rational decisions. Now, let's talk about the trade numbers because I know that the American situation with the tariffs and everything has everybody on edge. Stats Canada reported that our national trade deficit widened to over $31 billion last year. That's the largest shortfall we've seen outside of, let's say, COVID. Exports to the US have dropped almost 6%. If you work in manufacturing or exports, this is something you're watching closely. For the rest of us here, this is how it filters down to real estate. When trade is uncertain, businesses get cautious. Naturally, they slow down hiring, they delay expansion. And when people feel uncertain about their income, they pause major decisions, well, like buying a home. But here's a perspective I want to offer: this uncertainty is already baked into the market. Buyers have been cautious for months. Sellers are noticing. That caution is exactly why we're seeing more room to negotiate than we did a year ago. The trade situation is something to watch, not something to panic over. All right, let's look at the actual housing data from CREA. I know, exciting stuff. In January, national home sales dropped about 6% from December, and they're down over 16% compared to the month before. At the same time, new listings rose more than 7%. So, what's happening? More sellers are putting their homes on the market, but buyers just aren't jumping in at the same rate. Okay, so this shifts the balance. The national sales to new listings ratio dropped to 45%. In simple terms, that means we're moving into a market that favors buyers even more. So, not dramatically, but noticeably. Months of inventory has ticked up to 4.9, which is still relatively balanced, but trending in the buyer's direction. So, in simple terms, for Oakville, this means if you've been waiting to buy, you likely have more selection and more negotiating power than you did last year. If you're selling, it means pricing correctly from day one matters more than ever. CREA is still projecting prices to rise modestly this year, around 2.8% nationally. However, when it comes to the local market within the GTA, that's probably not going to happen. Now let's look at rentals because this is where we're seeing some real movement. Urbanation released their January numbers. The average rent for a one bedroom in the city is now 2183. That's down more than 7% from last year. Two bedrooms are down almost 9% to $2,800. So if you're a tenant, you probably felt this. Landlords who were asking top dollars last year are now adjusting expectations. More units are coming online, and that means competition amongst landlords is actually increasing. So why is this happening? A lot of condo investors who bought pre-construction a few years ago are finally taking possession. They need to fill their units, so prices are coming down. For renters, this is a chance to lock in a better rate or negotiate better lease terms for themselves. For investors, it's a reminder to run the numbers carefully from day one. The days of assuming rents will always go up, well, they're behind us, at least for the short term. But for people renting while they save for a down payment, this is a welcome break. So here's a stat that I think gets overlooked. Stats can ask people why they moved. One in four said they moved to get a bigger or better quality home. Honestly, in this market, I would have thought that that ratio was lower. But it wasn't because of a job, not because of a crisis, because they wanted to upgrade. This is the engine of our market. People in their late 30s, early 40s, the exact demographic that makes up much of Oakville are in the upgrade phase of life. They want more space. They want a better school district. They want a home office that isn't also the dining room. That motivation doesn't disappear because interest rates are steady or because trade talks are complicated. It might get delayed, but it doesn't go away. So if you're in that phase of life, you're not alone. And understanding that helps explain why, even in a slower market, quality homes in good neighborhoods still hold their value. So here's where we land. Interest rates are stable. The economy is cooling slightly, but not collapsing. Sales are down, but that gives buyers more room to negotiate. Rents are dropping, which helps people save. And the fundamental reason people move, well, to upgrade their lives, is still there. The market is taking a breath. After the chaos of the last few years, that's actually a good thing. It means decisions can be made thoughtfully. It means less pressure. It means more balance. So, if you're in Oakville right now, whether you're buying, selling, or renting, you're operating in a market that rewards patience and good information. So, here's what I'd like to ask you. Based on everything we've just covered, the rates holding steady, the trade uncertainty from the US, the shift in sales and rents, what is your next move? Are you looking to buy this spring? Are you thinking of selling? Or are you watching and waiting to see how the next few months play out? I'd love to know where you stand. Drop a comment and let me know. Buy, sell, or wait. Your perspective helps me understand what people in the market are actually thinking at this very moment. If you found this breakdown useful, hit the follow button. I'll be back with more updates as the market moves. And if you have a specific question about your situation, reach out. That's what I'm here for. Thanks for watching.